Today, I want to explain how retail investors have been buying more and more shares over the last 2 years and show you proof of how up to 9.7 billion AMC Synthetics exist right now. Last year it was rumoured this number was around 4 billion synthetic shares, but now, a year later, this number is likely as high as 9.7 billion. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, Orbit posted saying I don't think they get it. We're not leaving and most of us are buying more. I asked all of my friends and family that got involved where they are roughly now from where they started. So you can see this user has made a list of his 13 friends and how many shares they held back in 2021 and how many shares they hold this very present day. Now I've also done some quick calculations, but what I wanted to point out is that every single one of his 13 friends hold more shares now than they did 2 years ago. And actually many of those friends have increased their shareholding significantly, from 50 shares to 550 shares, from 400 shares up to 1,200 shares, and so on. Back in 2021, his 13 friends held an average of 218 shares per friend. Now we know there's 516 million shares in the float with 3.8 million retail investors, which should give an average shareholding of 135 shares per person. Back in 2021, his 13 friends held on average about what each shareholder should be holding right now. They were holding 200 shares-ish, give or take each, and they should be holding around about 135 shares. But now in 2023, 2 years down the line, that number has exploded significantly. Back in 2021, his friends held on average around 218 shares. But right now in 2023, his friends hold on average 2,573 shares per friend. That suggests that his friends on average have increased their shareholdings by around 10 times as many shares as they held back in 2021. And I would hazard a guess and say that's fairly representative of all AMC retail investing shareholders. Many of us, if not all of us, have increased our shares that we held compared to 2021. Back in 2021, shares were trading between $30 and $70 per share, and it was fairly hard to load up a significant number of AMC shares. But considering the price is so much lower in 2023 due to all of that illegal manipulation, apes have built their shareholding significantly, creating more and more synthetic shares. If you take the average shareholding of 2,573 shares per person, multiply that by 3.8 million retail investors, you get around 9.7 billion shares in existence in total. But obviously we should only have 516 million shares, so that's over 9 billion synthetics that have been created over the last 2 years. And I'm sure there is likely many of you watching this video that hold more than 2,500 shares each. Again, I'm sure there's people that hold less than 2,500 shares, but maybe on average, that number is around 2,500. Which obviously would suggest over the last 2 years, the number of synthetics in existence have increased significantly, from an estimated 4 billion synthetics up to maybe 9.7 billion synthetics total. And as Investor Turf has said, that's why it's so suspicious the AMC price has been trading downwards over the last 2 years. We've had court documents confirm that 3.8 million retail investors still exist and have not sold shares and have actually been buying more shares. So if us 3.8 million retail investors have increased our shareholdings tenfold over the last 2 years, how on earth has the AMC price been falling? Suspicious. And that's why, as the Las Vegas ape tweeted, he said if the ape conversion and reverse split was no big deal, it would have happened months ago, without incidents, without a lawsuit, without a special master, and without endless letters from shills. The reason why the ape conversion and AMC reverse split has gone on so long is because someone does not want it to happen. They want to delay the lawsuit as long as possible. Also guys, you can currently get a guaranteed free share of Tesla or of Google and a $100 cash reward with Moomoo. All you need to do is sign up to Moomoo using the link in the description below. Depending if you want 5 free stocks and a $100 cash reward, or 15 free stocks, or that guaranteed free share of Tesla or of Google on top, all you need to do is make a qualifying deposit. You don't have to stay with Moomoo permanently, but Moomoo is also very easy to use and has tons of technical indicators on top. But Hang Loose has also explained that while the ape conversion and AMC reverse split is a good thing, unnecessary AMC dilution is actually a very, very bad thing. He tweeted saying, "Please stop cheering on unnecessary dilution as if it's simply free money. With the amount of shares AMC has authorized, equivalent to 4 billion shares in today's standards, they can effectively sell enough shares to allow most of the shorts to cover at these rock bottom price levels." Obviously, selling 4 billion AMC shares would allow 4 billion of those AMC Synthetics to close out of all of their synthetic short positions. He said everything has a cost when dilution happens. That money paying off the debt has to come from somewhere, and that somewhere is the pockets of shareholders. He said we'll be the ones paying for that debt as more value is stripped from our shares. That's market mechanics 101, and it allows the shorts to buy up these shares on the cheap to close out of their short positions. And a squeeze only works when there aren't enough shares to go around, when liquidity is thin, when the float is small, when there's more volatility, and when there's no unnecessary dilution, allowing those shorts to cover. Capital raising or diluting the float, however, will flood the market with new shares for more shorts to cover. So I guess AMC will be out of debt after dilution, but most of the shorts will be gone. So how is that a good thing for retail, and how is that a good thing for the squeeze? And that's why I've said I do think the conversion and reverse split is a good thing, as it makes that float smaller, it makes those shares harder to get, and it increases the volatility of AMC. But I have also said that unnecessary dilution of 4 billion AMC shares would pretty much destroy the squeeze. Now, Naya has also tweeted saying 2 weeks until this rubbish at AMC lawsuit ends. My God, that was the most obvious delay tactic ever. As I said, the reverse split and conversion makes that AMC float smaller and increases that volatility, and that's why the shorts did not want this to happen and why they've tried to drag it out for so long. Now, the reason why these shorts have tried to drag it out for so long is because this is all happening at a time when MarketWatch has just tweeted saying that leverage loan defaults have hit $25 billion and they're heading for their third worst year in history. This shows a lot of risky companies, risky hedge funds, and risky banks are defaulting on $25 billion worth of debt. Leverage loan defaults have hit $25 billion so far in 2023, on track to be the third worst year on record. Goldman Sachs predicts the defaults will reach $30 billion by the end of the year, and the increase in defaults is being driven by rising interest rates and economic uncertainty. And importantly, the defaults could have a ripple effect through the entire financial system, but they are not expected to cause a systemic crisis. So all of these leverage loan defaults are mounting up, they're spiraling out of control, and it could indeed ripple through the entire financial system. It says leverage loans are loans that are made to companies and hedge funds that have a lot of debt. And when a company or hedge fund defaults on a leveraged loan, it means that it is unable to make the payments on that loan. And the increase in leveraged loan defaults is a sign that the financial health of some companies is deteriorating. And the defaults could harm the stock market and the economy. So these shorts are obviously trying to delay the ape conversion and the AMC reverse split because they're defaulting on their loans, and they've created all of these synthetics and additional synthetics over the last 2 years that they cannot close out of. They're effectively trying to hope that AMC sells off these 4 billion shares before the reverse split is completed so they can close out of their shorts on the cheap. Now, obviously, I don't think AMC is allowed to do that unless a special resolution was passed in case of AMC's impending bankruptcy. I'm sure at that point they could sell additional shares for the shorts, and that's why the shorts are trying to drag on this lawsuit for so long. But obviously we know the reverse split is happening, and we know that AMC is not going bankrupt. On top of that, McSqueezy the Cow has tweeted saying the top US financial regulators say they are stepping up scrutiny of how exposed banks are to commercial real estate. Regulators are taking steps to emphasize risk management and examine exposure to CRE loans at their regulated institutions. And the Fed and FDIC have been preparing lenders with questions related to interest rate risks and commercial real estate exposure. This obviously shows another banking crisis is just around the corner, as these banks are still facing interest rate risks and a new risk of commercial real estate exposure. And he said, with your attention grasped, let's quickly discuss how commercial real estate is exacerbating the problem in the US banking sector, which is still very much not okay. He said, Reuters reminds us that as property values have been on a decline, office loans have become a growing concern for US lenders, as more and more borrowers are defaulting on loans. More than $1.4 trillion in US commercial real estate loans will mature by 2027, with some $270 billion coming due this year, and banks represent 54% of the overall $5.7 trillion commercial real estate market. That is obviously a massive amount of debt coming up for renewal that will likely not be renewed due to these falling commercial real estate prices, which will impact massively on those banks and on those hedge funds too. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.